Hi, it's Tuesday, August 2nd, 2016. Monaco 64 here, home of alternative economics and contrarian views. I'd like to talk about the government bond market today. And the reason I want to talk about it is because the fiat money system is backed by government bonds, not by gold. It's backed by the debt that is created by government bonds. The banknotes that are issued by central banks are issued when the government issues debt. So yes, the fiat money system is backed by government bonds. I've made a few videos. One was in June this year, June 10th, and it's called Central Banks Inflating an Epic Bond Bubble. And I'll put it up in the card on the eye up on the screen on the top right. And basically, I'm talking about how the policy of NERP and ZERP lead to a bond bubble. You know, bond prices go up, and especially the bonds that are longer term bonds, because there's something called convexity, which means the lower the yields go in the bonds, the higher and faster the prices go up. And in this video, I argued that that's a bubble in the making and that it could turn around very quickly. So that's the first video. The second video, more recent, July 18th, and I asked the question, is the 35-year bond bull market over? Have interest rates bottomed? So with that in mind, today I'm going to cover the JGB, which stands for Japanese Government Bond. I used to trade JGB futures when I was in the city of London. They were pretty liquid instruments, and they were traded in London, but mostly traded in Tokyo. So they were dangerous futures, because if you didn't roll the futures you did in London, you ended up with a position. It was a huge contract. So we hated trading JGB futures. That's just a little story. But anyway, the JGB futures on the 10-year JGB. And I brought up this chart. This is the September JGB, Japanese government bond. And you can see on the 27th of July, the JGB future for September got up to 154.01. And look what it's done in the last 4 days. It's kind of, I know it's only from 154 to basically 150.68 was the low today. Doesn't seem like a huge move. Let's say stocks can move a lot more than that. But for government bond futures, that's a huge move. And the fact that it's happened, 4 days in a row, basically, that's not a good sign. So I just wanted to show you first the JGB future, how it's like dropped very quickly. And that goes hand in hand with the convexity concept I talked about in my other video. And the 10-year JGB future is a long-term bond, so the prices have been going up a lot more than, let's say, the 1-year or 2-year JGB. And you have to keep in mind that most of these bond futures, the nominal price for them when they started the contract was 100. So we're now like 154. Now I'm going to look at the yield of the 10-year JGB government bond, and I've taken that also from Trading Economics. There's a nice little chart here. You can see that we dropped to, I think it was around minus 27 basis points, the 10-year yield. And look at it now, these last 4 days, what's happened to the yield. It's spiked up and it's almost back up to zero, the yield on the 10-year JGB government bond. So this is as you can see, is a huge spike for the last year and a half. That's the biggest move we've seen. So I think people need to keep an eye on these developments, because we could be seeing the beginning of the pop in the bubble of the government bond market, especially, the developed world government bond market. And also looking at, in the last week and last month and year, for example, the 10-year JGB yield right now is minus 8 basis points. And a month ago, it was at minus 27. So we've gone up 19 basis points in a month. And we're almost up to zero. Today alone is up 6 basis points, which is a big move for government bonds. And in the last year, though, it's still down 49 basis points. But I think we need to keep an eye on what's happening here in the last month. What else? The 30-year JGB, that's up 22 basis points in the last month. And the yield is now at 0.32. So that never went negative. The 5-year JGB, that's up 20 basis points in the last month. And we're now at negative 17 basis points. And the 2-year JGB is up 16, is now negative 18 basis points. So I would say this is quite worrying. The Bank of Japan came out last week. The yen still strengthening or the dollar's weakening. Today, the dollar yen, the dollar is down 0.7% at 101.67. The low's been 101.58. 100 will be the key support for the dollar against the yen. So the more the dollar drops, that means the yen is strengthening, which sounds a bit, contrarian, that the government bond market in Japan might be beginning to implode while their currency goes up. But that's, the thing about JGB, Japanese government bonds, that most of the government bonds in Japan are held by domestic savers. So if that government bond market kind of implodes, foreigners are not going to come and try to sell it. So that's why the currency is still quite strong, in my opinion. So very interesting. The same thing, for the U.S. bond market. Japan, I guess, is leading, because Japanese yields and interest rates started going down way before, European and American bond yields. So, but even the 10-year note now is 152. That's up 8 basis points in the last month. I think the low was around 136 in the 10-year. So, yeah, we're not. We need to keep an eye on this. This is quite important. I know it's boring. Government, bond markets are not something you hear about in the news, but I think it's very important because all other risk assets are priced off government bonds in each individual country. So what else? Yeah, the Australian Reserve Bank of Australia cut rates today to the lowest ever, to 1.5%. They cut by 25 basis points. And it seems like the Australian central bank is worried about low inflation, which is kind of farcical. I mean, and I don't think Australians are worried about low prices. I mean, I haven't been to Australia in many years. I was there as a 9-year-old back in the 70s, so I don't remember. But I talked to a lot of people here in England who go and visit relatives or go on holiday. And they all say it's really expensive in Australia, except for gas prices or petrol prices. Everything is really more expensive than in the UK. So, and the housing, house prices as well, they need a bit of a correction, I would say, in Australia. So the RBA is just following the same script as other central banks. I was reading that its governor, Glenn Stevens, was a visiting scholar back in the 90s to the San Francisco Federal Reserve Bank, and the Aussie Central Bank also follows this inflation target policy, which is ridiculous, trying to keep inflation at 2% or whatever rate they keep. But anyway, so yeah, government bonds, keep an eye on them. I will keep you updated because I know where to look, because I've worked in this market. That was the market I worked in, government bond futures. Apart from that, what time is it? It's 9:20 London time, so it's 4:20 New York time, quite early. Gold is doing fairly well. It's 1359 right now. That's pretty much near the high, up 6. The Dow is down 30 points at 18,370. I think 18,350, 360, that's a key support because that was the previous all-time high from last year, around that level. What else? Silver is up 11 at 2055. Yeah, and the dollar is down 0.8% against the yen. So that's another important thing to keep an eye on. And let's have a look at energy or oil. I made a video about oil yesterday. Let's see. We are at 40.25, so still holding that 40 level. So if you enjoy my videos, please like, share, and subscribe. And you can also go in the description section below and donate via Patreon or donate in Bitcoin as well to my channel. Thanks for watching. Bye.